Good afternoon, ladies and gentlemen. Welcome to Thursday's Market SITREP or Situation Report here at Top Gun Options. Matthew Buckley, call sign Wiz. And here we go again with just kind of the market wallowing around up here, nibbling towards record highs, but just can't seem to get up there, man. Another day of mixed earnings as well. We'll get to all this in a minute. Let's start strategic. We covered this week, folks. Let's take a look at FXI. We have a couple really good-looking trades. This FXI bear call spread up 85% that expires tomorrow. That one's going to hit most likely a max profit of about $2,000 in a week. This is in the Analyze Your Trade portfolio. So bearish on FXI, but check out the chart, and you'll see something interesting. It's hovering. And the main reason the FXI is hovering and not going down, because there ain't no good news at all on the trade talks or in Hong Kong, is because of this. The PBOC, the People's Bank of China, has been injecting for the past those days. It's been elevating the most liquidity since January, and it ain't going to be enough. So I predicted this. I told you the invisible hand of the PBOC is holding this up right here. And the past couple times they've done that. In the old days, they used to tell, hey, we're injecting liquidity, kind of like our Fed. Now they're not saying a word, and they're doing it. Why? Because they don't want to give us any ammo, right? They don't want to see Donald Trump on Twitter going, look, the PBOC is having to do QE over there, even though the president at the same time is slamming the Fed here in his tweet. The Federal Reserve is derelict in its duties if it doesn't lower the rate and even ideally stimulate. He wants QE, so it's okay that we do it, but the PBOC can't. Take a look around the world at our competitors. Germany and others are actually getting paid to borrow money. Fed was way too fast to raise and way too slow to cut. So, central banks around the world are trying to jump into safe capitalism, and that's when the big one's going to happen. The Fred Sanford grabbing your chest, big one's going to happen is when markets kind of lose faith in the central bank's abilities to prop the market up. Market's starting to sell off here as I got on the air. We went from Dow being down 50 to Dow being down 90, almost 100. I think the vice president's giving a speech right now on China. And I don't think he's being too nice. I think he was slamming Nike, slamming the NBA, and slamming China. So look at that. The VIX just had a nice pop here, and the market rolled over a little bit, which is perfect for our bearish trades. Hong Kong formally this week withdrew the extradition bill that sparked all these protests, but it's too little too late, as every protester more or less has said. So that's potentially going to get uglier. It's Thursday, which means tomorrow's Friday, which means more protests in Hong Kong. And they're getting worse, it seems, every weekend, more dangerous, and the cops are kind of getting more thuggish as well. Oh, not just cops; they're obviously the army. Risk of imminent whipsaws. B of A's regime indicator is the last month of its downturn phase. I'll save you the math. We're getting ready to head lower. I predicted this one, I predicted this one, and I'm predicting this one. There's a bunch of reasons why it's going to head down. But right now, what was the headline yesterday? Stocks climb on mixed earnings today. Now the Dow's down 110. Stocks waver as investors focus on earnings. What did I tell you yesterday? Folks, the market should not be going up on mixed earnings. And today we're starting to see a little bit of the market starting to wake up to earnings just aren't. They're porridge. They're not too hot, not too cold, which isn't bullish. When it's kind of mixed, you usually don't see this type of market action. Twitter's getting hammered, which it should. Can't stand that platform. It's awful. Bunch of purple-haired freaks with nipple rings. I've lost, 2-3 Twitter accounts due to free speech, right? They don't like what Wiz has to say. Macro data. So what happened last month? You see these two big implosions? Those were PMI days, right? What happened this month? So the PMIs rebounded in October, but employment new orders kind of slumped. But remember, one of the hopes for a big cut this next week from the Fed was, hey, PMIs were weak. Well, they actually rebounded. So why is the Fed going to cut? And speaking about the invisible hand of the PBOC, what about the invisible hand of the Fed? $134 billion in liquidity in the repo operations. This is interesting. Fed boosts amount of liquidity offered to the financial system. So here we go. So Another reason, I say stocks shouldn't be kind of hovering up here on mixed. Why do you think we're hovering up here? It's right there. So while China's invisible hand is keeping their market up, the New York Federal Reserve's, well, it ain't invisible. They're telling us they're doing it. So this is going to be a really interesting Fed meeting next week, folks. What did Goldman predict? Goldman's saying, which is usually it's interesting how spot on they are. Obviously, I think they have a couple moles in the Fed, but the Fed is expected to cut rates, but that would be the last such move for a while. Fed officials are likely to say this is the end of mid-cycle adjustments, and the central bank is most likely going to remove this phrase, act as appropriate to sustain the expansion. This is what's comical, folks. That Fed meeting, implosion. They said more or less the same thing. This Fed meeting, implosion, they definitely said what Goldman Sachs says they're going to say again. What did they say? This was a hawkish cut last time, folks. It was a cut, but hey, you guys better not expect any more. So we're going to get another one of these Fed meetings where they're going to cut and do the whole, but you're not going to get any more. I don't know, man. I'm losing. They're losing all credibility in my mind. Good looking week across the portfolios. So we have our analyze the portfolios and weekly debrief coming up here at 1 o'clock. We had our weekly options bear call spread. That was a 2.5 day trade. Bear call spread on the S&P 500. That saw about $1,600 in profit. If you were in that one. In the PLTB, we got bullish this week, the primary live trade brief. We got bullish on UTX, kind of a defense pick here. Let's take a look at UTX after earnings, blowout earnings. And so did Raytheon today. Raytheon was one of our portfolio gods for a while there, but we're going to shift over to UTX. So UTX up a nice percent today. And also in the primary live trade brief, we got bearish on FXI out to next Friday. There just ain't nothing good going on. And we put on the 42 and a half bear call spread out to next Friday. Let's go back to FXI real quick. Check that out. Yep, down here at 41.21. And obviously, I think that's going lower by next week. And in accelerated retirement, we took a look at a Monday, right? Placed this yesterday, a 30-20, 30-25 bear call spread on the S&P 500. I just don't think, I obviously think we're going lower. My strategic mindset is volatile to bearish. And I just don't think we're going to get above there by Monday. And then Tuesday, Wednesday, we're grabbing a big bucket of popcorn and doing nothing but watching the Fed. Okay. Amazon after hours should be an epic quarter. Amazon's big investment in free one-day delivery expected to spark growth, but it's, their profit margin's going to shrink. But who cares? Jeff Bezos doesn't care about making a profit. He wants to take every cent that they make and go do something with it. He's a great entrepreneur, and I think it's going to be a blowout. So they're expected to report revenue of $68.8 billion, up 21.6% from the previous year. So it's going to be interesting. So after the close, I'm going to be multitasking. I'm going to be trying to get on that Amazon conference call, but we also have a 4:30 E-Trade platform brief. So the folks from E-Trade are going to stop by and give us a platform demo at 4:30. If you want to join, just check your email, okay? All right, I got to get going. I'll see many of you in Analyze the Trades and the weekly portfolio debrief at 1 o'clock. Have a great rest of your day, and I'll be back with Friday's market wrap-up tomorrow.